All right, subsequent events, questions, multiple choice. Let's jump right in. On March 21st, year 2, a company with a calendar year end issued its year 1 financial statements. All right, so I'm going to interrupt already. Subsequent events, you really want to pay attention to the dates and think about our period. In this case, we are talking about the year 1 financial statements. We want that year 1 financial statements to properly and accurately not disclose. I'm not going to use the word disclose because that is more so referring to the notes here. But we want them to reflect and be recording the proper dollar amounts for what happened in year 1. So let's keep reading. On February 28th, year 2, ding, 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 keep in mind that's in year 2, the company's only manufacturing plant was severely damaged by a storm and had to be shut down. That's a big deal. It says the only manufacturing plant, so that's a big deal. Total property losses were $10 million and determined to be material. The amount of business disruption losses is unknown. How should the impact of the storm be reflected in the company's year 1 financial statements? Let's think about this for a second. That's obviously a big deal. We know it's a big deal, and it's something that stockholders, investors, the general public needs to know about. However, this happened after year 1. So the dollar amounts in year 1 might be great, might be okay, whatever it is, but they do not reflect the damage to the warehouse. That would be reflected in the year 2 financial statements. However, we need to let people know that this happened because we can, right? It's before the issuance date, so we have time to go back and make a note of it. But the whole point of issuing the financials is that the numbers are correct. Remember, even with going concern, the company could be on fire, going out of business, just total liquidation, looking like it's about to go down, and you can give that set of financial statements an unmodified opinion because they're correct. We don't care if the company's doing so poorly that they're going to go out of business next year. If it's properly disclosed that it looks like they're going to go out of business and the numbers are all correct, that's a great set of financial statements. They're great in the sense they're accurate. So in this case, we want year 1 to be accurate and not disclose the damage. That would be disclosed in year 2. So let's read through. Accrue and disclose the property loss and additional business disruption losses in the financial statements. Nope, because it's asking about year 1. If it said year 2, then we would. Accrue and disclose the property loss with no accrual or disclosure of the business disruption loss. So that's saying just take the property loss and not the business disruption loss? No, like they were going to do the same thing for both of those. Provide no information related to the storm losses in the financial statements until losses and expenses become fully known. No, we are going to let our investors, the readers of the financials, know about this. It's something that's material. It's something that is going to severely affect the company going forward. We just are not going to put a number down yet because it didn't happen in year 1. Lastly, do not accrue the property loss or the business disruption loss, but disclose them in the notes to the financial statements. I'm going to say yes there because year 1 will be accurately portrayed and shareholders and readers will know that this did happen year 2 and it will affect year 2, but it will not affect year 1. That's a pretty good question. You'll see one similar to it in the future. Let's take a look at this one right here. Before reissuing a company's prior year financial statements, the company's accountant becomes aware of information that may have a material effect on the prior year's financial statements. Which of the following actions would be most appropriate for the accountant to take? All right, let's think about this. This is kind of like an audit question. Dang. All right, well, it's on FAR and we got to know it. So let's think about it a little bit. I'd ask you for your thoughts here, but unfortunately I won't be able to hear what you're saying. Before the accountant can make a decision on whether or not to disclose a subsequent event or issue or reissue the financial statements to account for it, the accountant needs to understand how the information is going to affect the financials. So let's read some of the answers. Would we just disclaim personal responsibility from the statements? No. I mean, that's just kind of an extreme. An extreme. And generally, when you have extremes, those will not be the right answer. Saying, okay, walk away from it. This happened. We're not even going to take a look at it. We're not going to bother to investigate or try to find evidence at all. Let's see. We've got also make inquiries to determine how the information will affect the prior year financial statements. Okay, well, that's not jumping to one conclusion. That's saying we're going to actually do a little work here and try to figure out if it's a big deal. Reissue the financial statements without performing additional procedures. Again, that's kind of an extreme because it's saying we're just going to do it without doing any of the work, without trying to verify if they need to be reissued. So I'm going to cross that off. And lastly, reissue the financial statements after obtaining management's assurance that the information does not affect the prior year's financial statements. Again, this is basically saying you're not doing any of the work and you're just going to trust them, which we can't, right? We got to do our own work as accountants. So final answer, best answer here is letter C. You're going to make inquiries to determine. So like maybe it's completely immaterial and maybe it's not a big deal. It's a big nothing burger. Okay, cool. Well, you did enough work to determine that so you can back it up as the preparer of the financial statements. And yeah, that would be our final question, final answer. Hope you guys enjoyed subsequent events, and I'll see you next time.